the Hang Seng, which is trading with a cut of around 13 points.
So I'm very bullish on India long term, but I think in the very short term, there are some headwinds that India has to reckon with.
We should not take the market performance for granted.
The first rate on the index is absolutely quiet with a bit of a green hue. 18,650 is where we are holding.
I think as long as the spirit of entrepreneurship is there and as long as growth is there, the smaller and mid-sized companies will always grow faster than the large cap.
The MPC decided by a majority of 5 members out of 6 to increase the policy repo rate by 35 basis points to 6.25%.
We were expecting the stance to be tweaked a bit more, so they haven't done it. And I think what RBI has done is kept the optionality with them.
Now as we speak, we're down 70 points.
Prices have corrected by 3 to 4% in India, in line with what is happening globally.
I think the governor has kept the door open for a possible small hike in the next policy.
The worst of inflation is behind us.
While there is a 25 basis point hike, there is a bit of a hawkish stance in the policy statement.
Well, that was the day so far. Hello and welcome to a new edition of Closing Bell. I'm Prashant. We're starting early today at 2, but we will go on all the way till 3:30. Rima is with me in the studios as well. Rima, hi.
Hi.
Almost a holding pattern, right? Not very much since the RBI policy, post-policy sell-off on the Nifty at least. So the selling started at about 10:30 or so. The market did swoon a little bit. It recovered from the lows. And after that, as you can see, almost plateaued out. So 1/3% lower, neither here nor there. But you got about a 62 odd point cut. Broader markets, of course, are a little worse off. So you got almost 1350 stocks which are lower. I'm talking about advances to declines. And you got advances at about 850. So that is swung. And mid caps and small caps are doing worse off as compared to what the Nifty is doing. A little bit of a opposite kind of situation as compared to what we had over the last few trading sessions. Mid caps and small caps have been grinding higher, pushing higher, and they've done well recently, especially in the month of December so far. Rima.
Hi. So that step down happened at 10:40, 10:45 after the markets comprehended that perhaps the RBI stance is far more hawkish than what they had earlier anticipated. There is likely to be one more rate hike. That seems to be the consensus that we got from our experts. It could be a small rate hike, 20, 25 basis points. Another one is coming. And then depending on data, markets could be in for a pause. But the RBI statement or the RBI words that they're keeping an urgent eye on the evolving inflation dynamics means they're steadfastly looking at inflation and they're going to do whatever it takes to bring it down. Also perhaps to spook the markets a bit. I just want to begin and put out some analysis that CLSA highlighted earlier, and this is a bit sobering. They're saying 2023 may be seeing or may be starting off near a growth. They're saying next year could have an impact on account of aggressive tightening actions taken by the Fed, and 2, the possible strength in the Chinese economy after it opens up. Plus, when you look inwards, India's valuation is at 24% premium. It's well over its historical average PE. And they're saying, CLSA's analysis shows that such high valuations generally lead to negative annual equity returns over the next 1 to 2 years. Plus, the investor sentiment, as they measure it, is at extreme bullishness. It's close to 90%. And therefore, according to them, we could see a migration away from the equity investment into debt, not just in India and in global, which is why they're titling the strategy note is that are we starting 2023 near a peak? They also say that next year is going to be getting into an election year. And typically, in the previous election cycles, 2003, 8, 13, 18, have all seen a peak in the Nifty in the January, then followed by a correction with a bottom in April for all of 2008. So there is going to be that election angle as well. 1 year down the line, but we will be getting into that election phase as well. But we'll talk all that and more. We've got a sterling lineup for you in Closing Bell today, and this is it. Like we've been telling you, it's celebration time as we turn 23 today to talk markets, investing. We'll be joined by big market voices, the young Shankar Sharma, Hiren Ved, Rupen Rajguru. We'll also discuss market technicals with Mitesh Thakkar of earningswave.com. We'll get in his top trading ideas. Amisha Vora, Mayuresh Joshi will be joining in for a fundamental stock analysis. Key excerpts from our conversation through the day with market experts and corporate voices, all lined up on Closing Bell. All this and much more in the next 1.5 hours. All right,
so that's the lineup here, and we have Shankar Sharma now joining us. I was going to say market veteran Shankar Sharma, but I'm going to say market expert. Shankar always takes apatti to that term, so I won't do that. And this is a special occasion, 23-year anniversary, 23-year birthday, Shankar. And you're someone who I can absolutely clearly, without hesitation, say is as young as hard as they come. So great to have you with us here on the program. Good afternoon.
Yeah, thanks for having me. And I really, wish all of you guys a fantastic birthday party, tonight, and many, many, many more to come. And I want to see you guys around when, when I turn 100, which is, I think, at least, 6 decades away or 7, maybe. If you're 23, I'm probably 33 or something like that. And, and I'm sure if I called CNBC a veteran channel, you wouldn't like it, right? You're just 23 years old.
So when you're 100, can we call you a market veteran? You would have had decades of experience then. At that time, would it be apt?
You can call me a middle-aged market guy,
Okay.
That's it. Yes, middle-aged. Yes, correct.
There was Ashish Chauhan, CEO of NSE, who was with us, Shankar, on the program, and he really described it. He said, CNBC was born mature. And I think that's a better way, not veteran, but I think that's a better way to put it.
I mean, not just that. So if you look at Sachin Tendulkar, he started at 16, and at 23, he was being called a veteran. But was he a veteran? No, he was still a very young player by any standard. So, put me in that category. I'm not saying I'm anywhere close to being as good in markets as Sachin was in cricket, but I'm just saying you get the general drift.
Yeah, no, absolutely, we get it, Shankar. So how are things looking, with markets? The RBI policy today, I don't know why, but it did surprise some people at the margin that they left room open perhaps for one more hike, and the market did take notice. What did you make of it, Shankar?
So frankly, I was busy in meetings. I didn't even know that there was, something coming up. I knew I wasn't sure that it's today or tomorrow. But be that as it may, that just goes to say that and show that I didn't, put a lot of, store by what the RBI said, because I do believe that inflation being a game of smoke and mirrors, and I think we have spoken about it on some of your previous shows, it's just a matter of sitting through a period of moderately high inflation, and it will scroll off. Just mathematically, it will scroll off to become moderate in the coming periods. Even if RBI had done nothing, okay, you would still see a moderation of inflation. That's the way the arithmetic of inflation works. Prices don't come down. It's only rate of change which comes down. And because of a higher base effect, the next period in all probability is going to have a lower print. So it's just a game of smoke and mirrors. Central bankers like to claim credit. I just just say, it is all complete nonsense. So, so the point being, I do believe that inflation scare in general, the rate of change, which is inflation, is behind us. India has weathered it reasonably well. And therefore, I don't see really, and I think somebody was mentioning some report, some broker, I don't know what the name is, but whatever the name is, I don't care, was talking about election year patterns, and that if equity bullishness is 90%, then there is disappointment ahead and all that. And, these are kinds of spurious correlations we draw. First of all, there is not enough data in election periods. Okay, how many elections have we had in the last 30 years? Approximately, I think 6 or 7 elections, or 8 elections if you count some governments were less than 5 years. That's just not good enough to make any conclusions on what election or pre-election years hold. And as regards the 90% bullish outlook for the markets, or more bullishness in the market, do they have data going back 50 years to tell us that each time it was 90% bullishness, it was followed by a period of underperformance? So we just pick and choose things that suit our point of view. And the point of view right now is that India is expensive, and I don't know on what metric they call it expensive. And therefore, India needs to underperform. And therefore, we will pick data points to suit that point of view, irrespective of whether the data makes sense or not. My view is simply that 2023 is going to be even better than 2022.
Shankar, we've got our colleague Nigel D'Souza as well, who's now at the Bombay Stock Exchange. Hi, Nigel. How's the mood over there? Okay, I don't think he can hear me. All right, we'll try and connect with him, but he's there on location in the morning. He was at the National Stock Exchange, and now we're celebrating at the BSE as well. Shankar, irrespective of what happens at the aggregate level, whether the index moves up 5%, down 5%, valuations are at one standard deviation above historical levels, etc., it also boils down to the stocks that you select, the sectors, the themes that you bet on. Tell us, at the current stage, which are the themes which are looking interesting to you now?
I've been consistent on the one theme, and which is that, small companies will beat the daylights out of large companies. You can see the big headline index companies that were the old favorites have gone nowhere. So an HDFC Bank or an Asian Paints or a Lever, and many others. They've done precisely nothing for 2 or 3 years, and 2 or 3 years of flattish returns is a lot of money to leave on the table. So the Nifty's performance has been driven in large part by the outlier pack, which is the Adani Group, more than the old favorites. So I stick to my point of view that India is a collection of many markets. A $3 trillion economy, or maybe $3.5 trillion economy, means each region is $700-800 billion, which means that each region is equal to the GDP of Saudi Arabia. It's equal to the GDP of Turkey. A single region in India, if you were to look at the Western or the Northern, which is $700-800 billion, these are equal to very large size economies in their own right. And therefore, the play is very simply go and pick companies that are servicing these regional plays rather than look at pan-India. Not to say you should not, but I'm just saying the opportunities the undervalued, undiscovered opportunities in regional plays is just humongous. And every single day, I come across players and companies which are very strong in their neck of woods. So that's really where my focus is. Small companies, regional plays, in my view, will deliver stellar returns.
Hi, Shankar. Good afternoon. As you have been maintaining that the way to go and the game in town is the small caps, and you're sticking to that point. So let's see how 2023 goes. But Shankar, in the past, we've had this discussion about these new age themes, and you've asked us, what about them? There was many people who had totally disowned them, but post that price correction, are some of these businesses become, at least could you give it a second look? Will you be looking to get in at some point of time? Any of these themes, you've got a handful, 4-5 of them that are listed.
Well, there are two things here, Nigel. First of all, when they were going to do the IPO, I was very enthused that India for the first time had started welcoming tech companies instead of their being forced to migrate to Hong Kong or to the Nasdaq exchanges. So India is their natural home, and they ought to list in India. But these companies misuse and abuse that opportunity by crazily overpricing their offerings. This path, if you can call it that, will remain on them for a while to come. Market में जो ये पाप और पुण्य होता है ना, उसके बाद वो 14 साल का बनवास होता है. So you have to spend not 14 साल, but at least 14 quarters, repenting for the sins you have committed. And therefore, it's the fitness of things that I must mention that there is a tech company I invested in, nearly a year back, which is IPOing, I think, next week. It's a company called Dronacharya. It's into the drones and the drone training. And when I criticized the tech offerings a lot, so I said I must practice what I preach, and I insisted to management that we must price this offering for this company at the same price at which I bought it nearly 1 year back when it was pre-revenue. Now the company is annualizing, in my estimate, at about 20, 25, maybe 30 crores of revenues for the first year of operation, solidly profitable, and yet I bought at 54 nearly 1 year back at virtually zero revenue, and now the company is IPOing at 54, the same price. To my mind, that is a new normal in IPO pricing because the tech companies have abused that. The last thing I want to do is that a company I've invested in should go and abuse the same privileges the market accords to new age companies. So I think the new age companies will still need to spend time in Banvas for some time to come. I don't think they're going to become hot favorites anytime soon. I'm fairly certain about it.
But are they at least, will they bottom out? It's also process, right? I mean, bottoms are not made in one day, but is that process on, you think, Shankar? With some of these names, will that happen during the Banvas that as you described it, over the next several months? I mean, yeah.
I mean, it's hard to put a bottom to a lot of these companies because the valuation bottom doesn't exist as far as I can see. I mean, most of them are still hugely loss-making. You can only argue the losses narrowed, and some company which sells lipstick or something. They are moderately profitable, I think 4-5 crores of profit, and still supports a market cap of, I don't know, 40-50,000 crores. So it's still completely bonkers. So there is no valuation support whatsoever. So even if they become profitable, it'll actually become worse for them, because then we will start to apply normal price to earnings multiples, and most of them add forward multiples. Even if they become profitable, are still 200, 300, 400 times earnings, assuming they become profitable. So you can buy a trade here. I'm not so sure whether the bottom has been made in a number of these companies.
Any recent additions in the small cap universe for you, Shankar?
What is publicly known is what I can talk about. So, I'm very bullish on real estate. I have bought a company called Rama Pipes about, I think, 3 months back. Stock has done very well. I'm bullish because that again is a play on the real estate market. I've invested in a company called Kamdhenu, which is again it's making TMT bars, again a real estate play, or let's say overall construction play. And I invested in a company called Sumit Woods, which is again the thematic is the same, that they service basically northern suburbs of Mumbai. They haven't even got to Vashi, and yet they have so much business in redevelopment in just like 4 or 5 Mumbai suburbs, which are probably equal to huge cities in their own right, on a global basis. So I am really playing the theme of regional plays. I'm playing the theme of real estate. I like real estate as a play, and therefore downstream real estate, companies that supply to real estate all look good. So pipe companies or TMT bar companies or even laminate companies or even real estate, redevelopers themselves, they all look very good.
All right. Shankar, tell us more about that Kamdhenu investment. They have that paint business as well, I think, if I remember correctly, in there, and they were looking to unlock value. Run us through a few more data points out there.
So they have demerged that. So it's not the paints business that I've invested in. It is actually the bars business, and they have an interesting model. It's a very asset light model. They run a franchise business. So while you can technically call it a manufacturing company, they actually are a collection of companies. So I like the model. The ROEs are, I think, maybe 25-30%, which is fantastic for a business of that kind. It's a very old company. It's a decent brand. I'm sure a lot of us have heard about it in the 90s as well. So it's in a lot of ways they lost their way. That's the kind of company I like. The companies that were good, had good brands, lost their way. And then management or maybe second gen comes back and tries to turn things around. So this one falls in that kind of category. Good industry, good brand, lost its way, coming back. Valuations are not demanding. ROEs are good. Capital light business model. All of the boxes that tick. We'll see how that goes.
That IPO which you talked about, interesting one at least. I don't know much about the company, but the space is interesting and the name is very interesting. Dronacharya, D-R-O-N-E, right? The drone, so pretty cool. And you're saying
I thought it was a very good name. Yeah, very good name. That was the first thing that attracted me. Apart from the fact that the founder of the company, Prateek, he's the son of 2 ISRO scientists. Right. So he grew up, playing with satellites as a little kid. That's the kind of tutelage he got, because he was his both father and mother both were scientists in ISRO.
Yeah. No, we look forward when the IPO opens and speak with the management, etc. as well. Shankar, you said the other one, you said Sumit Woods, right? That has seen a huge, from 10, it's basically tripled very, very quickly. What do they do? And just very briefly, what's the thesis here?
So, you and I have interacted over a number of years, and you've seen my apathy towards real estate plays in general. So when this transaction came along, I was very, very skeptical. I was extremely skeptical because real estate is something I've never liked, right from the days of the DLF listing itself, which was back in, I think, 2009 or 2008, something like that. But this is not a land bank play. This is a pure asset light redevelopment company, which basically redevelops existing buildings. And the data is staggering that the number of buildings coming off for redevelopment across India or in the city of Mumbai, in the larger metropolitan area of Mumbai is just amazing. The numbers are humongous. So your risk is fairly low. Your balance sheet is fairly light. The chief business officer, he's a young chap, 35 years of age, Bhushan. He's a Harvard returnee. really well run, very conservative management, Maharashtrian management, conservative, not leveraged. They listed, several years ago. I know they had obviously the real estate market wasn't great, because of a lot of reasons, demonetization and all of those problems are behind them. They've turned profitable this year. And looking at the kind of order book and pipeline they have, even if they just go to New Bombay, Vashi, I mean, the amount of business they can write is just unbelievable, which is what I'm saying. India is no longer looks like one country. It looks like a collection of 5, 7, 8 major countries and pick little plays here and there. And I think you're going to make a ton of money.
Interesting. Thank you for highlighting so many of these stocks which we seldom get to talk about and throwing light on them. Shankar, great conversation. Thank you once again for joining us on this momentous day. As we slip into a break, let's listen into Madhu Kela's view on the technology sector. He feels the recently listed tech companies will become attractive sometime in the future. We'll be right back.
These are very good businesses.
Yes.
I would say they've created tremendous platform. They have a very good corporate governance. Some of the leaders who are leading these companies are extremely passionate and good. So I've started spending time on these companies, and I am sure somewhere down the line they will become good buys.
CNBC-TV18.
Okay, welcome back. The market is down 55 points, so it's right there. I mean, we saw a bit of a swing lower while we were in that conversation with Shankar Sharma, but that's come right back, and things are looking pretty back to where we started when we started at 2 o'clock. Along with the plethora of voices that we had since the morning, we also had Samir Arora, founder and fund manager of Helios Capital, and we spoke with him about the way forward for the market, and he made some interesting points. Listen in.
The only thing is we should not take the market performance for granted. Right now, what is happening is that, of course, we are bullish and generally India is doing well relatively and even absolutely. But every day we are ignoring everything else just on the basis that we have this domestic investor base which wants to start, and they have done well and they've held through these sort of bad phase of COVID and after that. But still, I think every day they just take it as if it is a given that in the end of the day, it's going to be up. For example, in the last 2 days, markets are down so much. Or even last month, once in a while, whenever these things have happened, we have become overconfident, I think, which I think is not, I mean, as a market, not as me personally.
Samir, what's going to be the big trigger from here on? I mean, we're almost in the last lap of 2022. As far as 2023 is concerned, Samir, what's the view?
So my view for next calendar year is that once the US market stop falling, which will happen in the next, I think, 2-3 months, or they may have already stopped, then we will have absolute returns. And India will pay for its this thing in terms of, having not done performance this year in absolute. Over time, this would also get absorbed, and over time, our returns will be in mid-teen for a long, long time.
1 lakh crore to 40 lakh crores, this mutual fund industry move. I mean, it's been phenomenal, the ride that we've seen. Do you think the retail participation will continue to go up despite whatever happens with FIIs?
No, we shouldn't say like that, because that makes it look as if the domestic guys don't know and they are just blindly coming in. So we should think not like this, that doesn't matter what happens to the world, doesn't matter what happens to FIIs, these poor domestic guys have no other choice and they are just... So the big picture is that everybody should invest in equities. Over time, equities outperform fixed income. Over time, equities outperform property for most of the investors, maybe not for developers. And therefore, there should be a reasonable allocation to equities, which Indians did not have for a long, long time. But we should still not sell it, treat it, that every day these guys have nothing else to do, so they will put money in equities. But big picture trend is true that has started 4-5 years ago. And as people see other people's success, as they see their neighbors putting in and doing well with their investments, over time this confidence grows and this continues. But let's not, that's what I'm saying, let's not hard sell it beyond a point. It is just that everywhere in developed markets and everywhere else, the equity allocations are quite high. And in India, people are still building it, and then more people are joining the middle class or investing class, and therefore the growth stories for long. But let's not say independent of what happens to FII is independent of what happens to the world kind of thing.
These new age companies, which you've been no fan of, really, have they fallen enough, you think, or there is a lot more to go, in your opinion?
Well, now we own two of them. We first bought Zomato and now we own Paytm. And we don't own it, but we also like the third one. I won't give its name since we don't have it yet. So I would think that at least we feel that for our style of investing, which is that we buy for 50% of the portfolio, we buy about 20-25 stocks of 2% each. And we hope that the stats work for us, which is that a large number of them do well and maybe one or two disappoint, that they have entered there, which is a very good thing as far as we are concerned. And now they have to perform on their own and do better.
Time for a short break, but more market talk on the other side. We'll invite Hiren Vaid of Alchemy Capital Management.
CNBC-TV18, celebrating 23 years of business leadership.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। पर उम्दापन की नई ऊंचाइयों को छूना चाहता हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
Investing without research is like driving blindfolded. Introducing Motilal Oswal Research 360. 35 years of Motilal Oswal's equity expertise, now in a single app. That too for free. Download now. Investment and securities market are subject to market risks. Read all the related documents carefully before investing.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
Mr. B, एक नहीं दो नहीं तीन नहीं काम कर सकूं चार भी. So show me what you can do, bro. नाम है मेरा Mr. Can Be Done. क्या तुमने पूछा what I can do? एक क्या 10 क्या 100 क्या bro? I can do a whole lot more. Bank account से लेकर business loan, FD, RD, edu loan, UPI तक. Mobile meter shopping faster get line, bro. You are in luck. कैसे bro? How? This is Canara Bank AI1.
आपके सपने हमारे अपने.
क्या हुआ चैंपियन?
दिन रात प्रैक्टिस करनी पड़ती है। यहाँ तो रात को स्टेडियम ही बंद हो जाता है।
एक काम करो ना, चेन छोड़ छोड़ के लगाना।
पापा?
अब करो दिन रात प्रैक्टिस, चैंपियन।
एक्स्ट्रा सेफ पॉलीकैप ग्रीन वायर, आपके सपनों को रखे सेफ।
Bharat Bond ETF by Edelweiss Mutual Fund is back. You can now invest in AAA rated public sector bonds with just 1,001 rupees. Choose between ETF or fund of funds option to invest. Remember, the offer closes 8th of December. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
This is TV18 and you're watching CNBC TV18.
Powered by LIC, हर पल आपके साथ. In association with Sarah, this is your space. Play it your way.
CNBC TV18, celebrating 23 years of business leadership.
Welcome back. Inching towards that 18,600 mark on the Nifty. M&M has moved to the high point of the day and buying continues in select FMCG names, ITC, HUL, Asian Paints. are all at the high point of the day. Outside of the index, fertilizer names are having a good day. Whether it's FACT, FACT, RCF, just pull up some of these fertilizer names, Madras Fert, and you would see some buying in the last 10 minutes. But how should you position yourself in the last hour of trade? Mitesh Thakkar of earningswave.com joins us with the closing strategies. Mitesh, what have you made of the day so far and your trades?
See, the day has been quiet, and we've talked about this, that the market will most likely get into a contraction period when you will see some volatility, but it will broadly be range bound. And while we were looking at the lower end of around 18,500, 450, and we haven't tested that, but the market has clearly not shown any kind of strength, to go on the higher side and possibly, start a rally again. So I think that's the kind of market we're into. Still a market which is contracting. The good thing is that most of the hourly indicators have started coming off the overbought levels, but they haven't started turning up yet. So I think, maybe a day or two still left for this kind of choppy movement, consolidated movement to happen. On the stock side, HUL is a buy with a stop below 26.75. Look for targets around 27.60 over here. And also a buy on ICICI General Insurance. This time we have some call option positions over here. That's a buy with a stop below 12.38 for targets of around 12.85 to begin with.
Okay, all right. Thanks a lot for that, Mitesh. Well, it's our 23rd birthday, so we have guests joining us from the Bombay Stock Exchange itself. And Hiren Vaid has come up, Alchemy Capital Management. Hi, Hiren. Good to meet you as always.
Hi, Nigel.
Well, 2022 has been a decent year, given the kind of headwinds that we saw. The fear is that 2023 could be a little off. Are you in that camp that believes that maybe, in fact, we're in for a bit of a rough ride on 2023? And more importantly, what about the breadth of the market? It's not feeling like we're at 18,500 plus. Most portfolios are feeling like 17,000 odd. Comment on that.
So, thanks, Nigel. Thanks for having me here on this very important day. So, first of all, happy birthday to CNBC and to the entire team. You guys do a fantastic job. I think we've done quite okay given the headwinds that we've seen, right? 2022 has turned out to be great. You couldn't ask for more. We are almost at new highs, right? But you rightly said it doesn't feel like, because the breadth of the market in the last couple of months has not kept pace with the Nifty, right? And I think it's very understandable, because if you really look at what's happened in the first half of the year, is that if you take the financials out, right? If you, let's say, take the top 500 companies in India, and if you take out the financials, while you've seen a very strong top-line growth, that's, if my memory serves me right, it's up like 34-35%.
Yes.
But if you look at the bottom line, that's down 25%. And that's primarily because margins have got impacted. You've at least seen a 500 basis point contraction on margins YOY, right? About 120 basis point quarter on quarter. And that's primarily happened because raw material prices went up, logistics costs went up. So in general, cost of goods went up, right? And we've seen that impact. And that's why the broader markets are not participating, while Nifty is at new high. Now, if you go into 2023, my feeling is that companies have taken a price hike, right? Raw material and commodity prices are starting to come down.
Yeah.
So I think it is quite likely that some of the margins that were lost in the first half should come back in the second half, right? Also, the third quarter should turn out to be a reasonably good quarter. Because it's been a festive quarter, anecdotally when we speak to retailers, you talk to people are out on the streets, they are enjoying, they're spending, right? And therefore, from a top-line perspective, third quarter should be good. And some of the price hikes that companies have taken should start showing impact, right? And anyways, the fourth quarter of the year
is normally the best.
Is normally the best quarter. So I'm hoping that if the market sees an evidence that margins are coming back in the third quarter, then I think we should see the broader markets also catching up
Yeah.
and participating with the Nifty.
You
right?
know, that's a very valid point, Hiran, that you made. And in fact, in the past week itself, we had highlighted a few facts.
Yes.
On the Nifty 50, earnings growth is looking good, 7 to 9% odd for the past quarter.
Yes.
On the NSE 500, however, there's a degrowth on earnings of around 3
Yes.
to 4%, and stripped of the banks and financials is down by 25%.
Yes.
But as you said, if we see good earnings in quarter 3, then things could look around. So
Yes.
that's pretty good.
Yes.
Now, I want to ask you about two sectors.
Yes.
Or two themes. One is the consensus sell of the year, new age companies, and then the consensus buy of the year. That's been the banks and financials.
Yeah.
Let's talk about the sells first. There appears, post this price correction, some of those themes have started looking interesting. We have disclosures on the BSE itself. Are you in the camp that believes that some of these stocks that have corrected big time, now there is gradual value, or for a longer term, you could play it?
You're absolutely right, Nigel. I think that, I still remember when I was asked this question when we were in that peak of euphoria in the end of 21, early 22, when all these IPOs were coming.
Right.
And I said, well, if these companies don't focus on profitability and cash flows, the investors will send them to the Stone Age from New Age, right? And that's exactly what's happened.
Right.
I think a combination of rising interest rates and the fact that investors are now putting a premium on near-term profitability and cash flows means that there has been a steep valuation correction in these companies.
Yes.
And they've gone from becoming, darlings and, want to participate to like completely ignored.
From darlings to heartbreakers.
Exactly, right? So I think from a purely sentiment perspective, it definitely makes sense to look at these companies. I think also what has happened is that many of these managements have realized that they need to focus on their capital allocation. They need to clearly communicate and show that there is a path to profitability.
Right.
And I think that's beginning to happen. So if you see, most of these guys are giving guidance that, okay, I'll become profitable in so and so quarter. Somebody is saying I'm going to be, cash flow positive in so and so quarter. So now investors are going to hold you to it and see how the progress happens, right?
Right.
So I think if you are a long-term investor, I think now is the time to start looking at some of these names, if not all, seriously, because somewhere down the line you'll get a very good entry point.
Okay,
into
all
these
right.
companies.
So some of these companies are offering value, and maybe from new age to stone age. Now, in fact, value is emerging yet again, and markets have their way, right, of teaching everyone a lesson. And sometimes that
Absolutely.
lesson you learn, you'll never ever forget. And it appears some of those companies, going by the management talk, they're talking what the shareholders want to listen to, and maybe the directions as well will be in that manner. So that's pretty good
Absolutely,
news.
but they have to walk the talk.
Walk the talk, very important, absolutely.
Yes.
But Hiran, what about the other one? The consensus buy, banks, particularly PSU banks. What a rally they have had.
Yes.
I mean, that's the best performing index this year, the PSU
Yes.
banking names.
Yes.
Have they done their run? But if the economy is going to recover and things are going to look up, then banks is a safer way of playing it, right? What's your take? 2023 with regard to the banks?
I think banks will continue to have a good run, right? And I think that, but I must mention that you will still see margins doing very well this quarter. Last year was also, last quarter was also very good. This quarter should be good. But I think from Q4 and then Q1 of next year, there should be some pressure on NIMs. Because deposit rates are starting to go up, right? And therefore, but I don't think that's going to be a challenge broadly, because I think they can still, show very decent double-digit compounding growth. Credit costs are still very, very benign. The economy should pick up. And, we are seeing very strong credit growth, right? 17% system credit growth is nothing to scoff at, right? And as the investment cycle picks up, right, you will start to see loan demand also coming in from the large corporates. So it's not just going to be retail credit-driven growth.
Corporate capex will
But it's also corporate capex which will sign in. So I think banks should still have a reasonably good run, in my view.
Okay, all right, Hiran. It's been a pleasure talking to you. Thanks so much for coming down and
Thanks,
having a chat
Nigel.
with us on our big day. That's our 23rd birthday. And you can join us for the party later as well.
Sure. Thank you so
guys,
much.
big takeaways then from what Hiran says is that the earnings for the NSE 500 companies, they could pick up. If that happens, then maybe the breadth of the market will improve. There is some value emerging with regard to these new age themes. And banks, well, they could see some compression on NIMs, but things are pretty much looking up. I'll toss it back to you all, but we'll be getting another guest. Amisha Vora as well will be joining in just a bit.
Okay, it's a power-packed show. As you can see, as CNBC turns 23, the celebrations continue. Big voices through the day and even after this short break. So stay with us. We'll be right back.
Welcome back. Well, as promised, we have Ms. Amisha Vora, MD and Chairperson at Prabhudas Leeladhar, who joins us at the Bombay Stock Exchange. Hi, Amisha. Always good speaking to you. Well, thanks so much for joining in on our special day, first of all. And what's the outlook first in terms of market? Some part of the market believes we are overheated. On the headline index, what's your take?
First and foremost, I can't start without wishing you all a very happy birthday.
Thank you.
To CNBC entire team who made it such a big brand for all and everyone who participate or yet to think of participate in the markets. CNBC is a must.
Thanks so much, Amisha, for your support over the years.
Really congratulations to the entire team to bring it up to this.
Thanks for your support and your good wishes.
Coming to the markets, Nigel, my view is that right now India is one of the best performing markets, and that itself brings a bit of a momentum. So I think that beginning of next year also, flows will continue to be positive.
Okay.
As we go into the year, I feel challenges coming up because one of the other markets, which is China, has hugely not performed. But there is a good possibility that a bit of bottom fishing may start when it is just trading at, say, 4-5 PE while we are at whatever 21-22 PE. So a bit of shift in the middle of the year is one possibility, or any time during the year is what I see. Also, I feel that till now what we are seeing is largely the urban recovery happening.
Right.
But rural recovery has evaded us.
Yes.
Despite a good monsoon, we lost a lot of crop again last time because of El Nino. And I think that next year we should see the rural economy supporting us.
Okay.
While exports will be a challenge.
Right.
So I think all in all, we will continue to see a positive market. I don't see huge cuts,
yes,
but a range-bound market.
Okay.
So a stock picker's delight.
All right, then let's get straight to those stocks then. And as you mentioned, a very valid point, urban India is rocking, but rural India, there's still pockets of pain. Now, before we talk about 2023, to the end of 2022, everyone's full up in terms of travel, tourism. You're struggling to get a room at various places as well. This theme is clearly booming. But from a stock market perspective, how do you play it? Do you play it by the aviation companies, the hotel industry, or do you have another thought in mind?
So the best, one of the best ways we think is playing it by the back companies, that is the travel back companies, which are more like a B2C.
Yes.
But beyond that, very light in terms of their capital requirement, very good balance sheet, free cash generating, and we'll see fantastic growth ahead. So VIP and Safari continue to be our amongst our top picks, and we see them almost, more than doubling their profits in next 3 years.
Okay.
But apart from that, I think particularly for hotel sector, they will have the phenomenal run continuing because the supply is not going to increase overnight.
Yes.
So for next 2 to 3 years, they will have occupancies rising, room rates rising, and so with top line, the EBITDA margins growing.
Right.
So Lemon Tree is one of the preferred picks that we have amongst the sector.
Okay, all right. So you've given us a few picks out there, and that's a valid reason of valid way of playing this entire unlock theme. If you have to travel, you require the bag, so you're going for VIP as well as Safari. Got that. And Lemon Tree from the hotel space. Now the other fear is that the domestic flows have been very solid. But now maybe there'll be some kind of deviation to fixed income, maybe to the real estate space as well. Given that sort of a mindset, one would have to be reasonably positive on the real estate theme. How do you play that? Do you play it by the listed real estate themes, the financiers, or the ancillaries? That's the pipes, the building materials, and the likes.
So I think that, particularly building material is a much better way to play it. Once again, they are consumer brands. For example, if I take a brand or a name like Kajaria,
okay,
so it's a market leader,
right,
growing very well, but faced huge challenge because their raw material supplies and cost of production went totally haywire last year. As we go into next year, and from here, they've not lost their market share. Only the cost structure is disturbed.
Yes.
As it comes back into place, I think the stock should start doing very well. Okay. And so also we are very bullish on some of the pipe companies, Astral Pipe and others. So I would rather play it through the home improvement or building material supply companies, this entire real estate play.
Okay, interesting one out there. Amisha, we've been asking everyone about what to buy, but what to sell. What are you fairly cautious on? I think bulk of the market is a little bit cautious about the globe, and India should do well. If that is the case, then what would you be a little bit cautious on? IT, metals, or are you all positive post the recent correction?
Look, IT and metal in terms of a little bit, they have derated already.
Yes.
So, and people accordingly have gone almost underweight, so to say. So I wouldn't advise further underweight.
Okay.
But I think that, one has to be slightly cautious on one ground. That last quarter, some of the best performing banks, I think, saw their best NIM. As we move forward, their costs will catch up faster.
Right.
And the excess CD ratios that they had, which gave them cushion on NIM, which will go away. So the NIM will not expand from here, though credit growth is good. But you've already been valued at 2.5, 3 book.
Yes.
So I think in terms of leadership, in terms of performance of the stock, what performed the best last year, that leadership will shift to maybe somebody like HDFC Bank post the merger and other overhang gets settled.
Okay.
So from, I think that within the sector, there will be a little bit of switch. Also, within the financials, I still continue to maintain that it's not the NBFC decade, it's more PSU Bank.
PSU Bank. Okay.
Because there is a deep value. It's always not an investment call because of, we know the government, the management structure.
Yes.
But right now it is in deep value zone still, and they will continue to perform.
PSU banks, you all have been positive and you believe there is still value out there.
Correct.
Well, Amisha, it's been an absolute pleasure talking to you. Thanks so much for coming down, speaking to us here at the Bombay Stock Exchange and running us through a whole host of stocks, whether it was travel, building materials, or even the PSU banking names. Well, guys, that was a good chat that we had with Amisha. Back to you guys in the studio, and I'll come back to you for more.
Thank you very much for that. And she also said that in the coming year, perhaps we will see rural demand pick up while exports slow down. And that was a theme even Morgan Stanley highlighted when they upgraded Dabur today to an overweight. That, coupled with comfortable valuations and that inflation is perhaps on a decline, makes the stock fairly attractive. Dabur is a stock which is up 1.7%. But Prabhuda Leeladhar's bets include Safari, VIP, Lemon Tree in the hotel pack, home improvement. They're looking at Astral Pipes. And in the banking space, they expect NIMS compression going ahead, and money could be made in PSU banks, which are currently offering deep value. Rupen Rajguru, the head of equity investment and strategy at Julius Baer, is now with us. Thank you very much for joining us. It's a very special day. But, now increasingly there are a lot of skeptics in the market about whether India can continue to outperform, because historically, whenever we trade at high valuations, the current valuations are 20, 21 times, historically, we've seen the next year to be a year where equity markets have given you subpar returns. Would you give credit to this historical data? How would you approach the markets right now?
Okay, thanks, Rima, for having me. And before I get into that, wish you, Nigel, Prashant, and everyone at CNBC-TV18 family a very happy 23rd birthday, and wish for many more glorious years ahead. On your question, about the valuation, and you're absolutely right, that at say 21, 22 times forward earnings, The returns 1 year down the line has been subpar. And if I were to add other parameters, wherein the bear ratio, which is the bond yield to the equity yield ratio, that also currently is trading, above average. Also, if I were to add that on the price to book, because that is a better indicator than PE, because PE at times do tend to get skewed. On that, we are not, we are probably just at, or we are closer to the average. So that gives us confidence that it is that we are not in an extreme overvaluation zone. Having said that, no, as I think the earlier guest was mentioning, that we are from a global perspective, we have to see where India stands vis-a-vis others. So going ahead from here on, India is more a valuation call rather than a macro call, and it is exactly vice versa for global markets. So if there were to be some improvement in global macros, because we have seen the worst, you might definitely see the relative attractiveness of India come off. So net, I would say we are evenly poised, as we are in the current juncture. And probably if there is were to be a rally in the global markets, India will participate, but probably might underperform other emerging markets if there were to be a rally in emerging markets.
Mm. You're also saying that rural recovery theme is a tactical play. What gives you the confidence that rural demand will recover in the first half of the year? What are the signs that you are picking up from the ground?
Yeah, so no, that's an interesting question, and in fact, some of the pointers, if you pick up from the latest Q2 commentaries, people are talking about green shoots in the rural economy. We have seen I think the good anecdotes are the auto numbers, especially the two-wheeler numbers. So the post-festive season, the November numbers were also pretty strong, and if you see from the Rabi crop perspective, as well as the overall reservoir level which we have, and higher MSP prices, all augurs well for a strong business momentum in rural India. In fact, one of the NBFC which focuses essentially, which is a vehicle financier focusing on the rural India, in their latest commentary indicated very strong momentum and disbursement, and also very good collection efficiency. And also finally, next year will be a pre-election year. So typically we see also a lot of spending from the government, which will be focusing on the rural India. So all put together, definitely it makes a case for a comeback of rural demand, which has been tepid for last, say, a few quarters.
Okay. So on the subject of pre-election year government spending, do you anticipate government capex to pick up? And if yes, what is the best way to play it? Because I was looking at, your thoughts. You like project execution companies more than the capital goods companies. Why is that?
So, Rima, if you see here, we expect the government capex to continue. In fact, the budget, which will be now 2 odd months down the line, to again focus on capex. So the government financing, especially the tax collection, has been quite robust. So we expect that to continue. And now coming from a market perspective, what we have seen, the early cyclicals have seen a huge re-rating. So all the capital good company stocks have seen phenomenal returns, right? If you've seen last 1 year, they have all got significantly re-rated. And that's the typical story. The early cyclicals tends to do well. So now, in some of the project-oriented companies, specifically say BOT companies or some of the HAM companies from a road perspective, I think that segment has been a big laggard. In fact, for the first 7-8 months, the government spending has been a little bit low out there, and they have not met their target. But recently, the minister also made a comment that they will stick to their full-year plan of the total roads which they are going to build this year. So that means the next 3-4 months will be pretty strong. So from an NHI perspective, also now they had some bit of on their financing side, some adjustments were required. So now it is done. So now we believe the next 4 months, the order inflow will go up significantly, and all the companies there. So what has happened in that industry, specifically on the BOT companies, there has been a good consolidation which has happened. The balance sheets are pretty good. and on valuations, they all are at probably sub 10 P multiples. So all it's a very potent combination for earnings growth as well as re-rating happening there.
Rupen, hi, afternoon. When we had you with us, I think early October last, you said that after a disastrous quarter for cement, that was Q2, Q3 should be better and it'll provide opportunities along the way. Now, last month of the third quarter in, what's your view? I mean, if you've tracked how things are progressing, and what's your view now?
Sorry, I just lost your line. So are you asked about cement?
Yes, Rupen. You were saying that maybe it'll offer up opportunities. Q3 should be much better. We had Anil Singhvi, a cement veteran, yesterday with us, who said much of the same. He said, it's we're the worst is behind. Now, degrees of improvement, of course, I mean, one can debate, but what's your own view?
No, you're absolutely right, Prashant. I know, like the quarter two probably was the worst quarter, as far as margins are concerned. It was probably at a multi-year low. And, we had impact of the higher input prices, plus as well as, the volume growth not coming through. Now we have already seen, the pricing of some of the input costs coming down significantly. In fact, case in point, the imported coal prices have come off significantly, and some of the other prices also, input prices have come down. And also there has been price hikes. And finally, what we are seeing also volume pickup. So net again, what I mentioned earlier, also in a pre-election year, the activity does tend to pick up. So cement as a sector, probably over next 2 to 3 years, we believe the volume growth in cement would be higher than the GDP growth. So from that perspective, it augurs well. And the supply side, while supply is coming off, but the catching up of supply will take some time. So net it creates a room for a better pricing environment. And since the margins are probably have bottomed out in the quarter two, it will not immediately shoot up, but yes, definitely we'll see the margins going up over next few quarters. So that should lead to also a very strong earnings momentum for the cement companies.
We've been asking this about these one-year-old newly listed companies, Rupen. We had Samir in the morning, Samir Arora of Helios, who said he's bought 2, he's considering buying another one. And others have weighed in as well. Maybe now, after all the price damage, one starts looking at them, if not acting immediately. Any thoughts, Rupen, and which ones in particular?
Prashant, here, I would look them more from how similar companies globally are trading and what's happening with them. Because the end of the day, how do you value this company, whether it's price to sales and what multiple is good, right? At a year back, 10 times price to sales was good. Probably today, 5 times is not good, right? So it all has a very strong correlation with what's happening in the global market, specifically in the Nasdaq market. So I will be very closely tracking those. Having said that, here we are right now as we speak, we are closely studying all those companies, and we have to see which companies are very close to their path of profitability, and not one-time profitability, but sustained profitability. Because end of the day, if profitability comes with a very slower growth, so one should not be giving a growth multiple to those companies, right? Because it's a chicken and egg thing, right? Because high growth was coming with high cash burn, but cash flow is now coming with lower growth. So we have to find the right balance. So to answer your question, right now we have not yet dwelled into any of these companies, jumped into buying into any of these companies. We are observing them, but I would say very closely watching what's happening to similar companies with similar business model overseas and what kind of valuation cut they have seen. Because similar will tend to happen in India as well. But to answer your question, we have not yet gone into dipping those companies.
Okay, not dipping your toes in these new age tech companies. Rupen, one final question. You started off by talking about how you are seeing green shoots about rural recovery, and the evidence you gave is the two-wheeler names, where the November sales have been pretty good for the likes of, say, Hero MotoCorp, etc. But in the auto pecking order, you're going with commercial vehicles, passenger vehicles, and then two-wheelers. Why is that? Why is it that you're not betting on two-wheelers where there is that rural recovery tailwind?
So, Rima, probably in a very short term, tactically two-wheelers will do well. But if I were to take a more medium to long term call out there, so here probably within all the segment, two-wheeler is the segment in which the EV threat is for real, and we are seeing a big growth in the, or rather huge EV penetration in the two-wheeler side. So there, the incumbent, the leader in the two-wheeler probably has not got on, full on into the EV game out there. So that disruption is very much there in play in two-wheelers, which is of course there in four-wheelers or passenger vehicles as well, but probably it is some time away there. So in the very immediate perspective, 1-2 quarters, probably two-wheelers will outperform, but over next, say, a year or two, we continue to have our preference towards a passenger vehicle, and the CV cycle definitely is also will be strong for next year or two.
Rupen, this has been a rich, insightful conversation. Thank you very much for joining in, and have a very good day. Slip into a break on that note. On the other side, as always, we'll get you a check on what dealing rooms are saying in our special segment, D Street Chatter. We'll also tell you what you can buy today to sell tomorrow. Calls coming in from our technical experts.
Okay, welcome back. We are at the low point of the day, mind you, at 18,568. 18,564 is the low, so we are practically there. And this is the latest leg down that we are seeing. It's been a pretty volatile session. The first kind of cut happened right after the RBI policy at 10:40. A middling kind of session since. And I think there was one cut at about 250, but the market recovered, and now there is this which is emerging. So at the low point with about an 80-odd point cut with what 17 minutes of session remaining. But our segment D Street Chatter is here. Nimesh, of course, speaks with a range of market participants to get us an insight into what's happening. Nimesh, what are you picking up? Afternoon.
Hi, Prashant. Afternoon. So, again, a day of consolidation, but the trend seems to be that the financials tend to outperform, and that's been the trend today as well. In fact, the feedback is after the credit policy, the volumes have picked up in the financial stocks, and those are well bid, both private banks as well as the PSU bank stocks. So, the RBI policy is pretty much on the expected line. So, and since then, you're seeing a bit of buying back in the financial stocks. The other important thing is the falling crude prices, and that's positive on the margin for the Indian macros, and that's why I guess India is holding up despite weakness in the global markets. I guess technically 18,300 is a level to watch on the downside. That's where the key support levels are. And on the upside, 18,700, 18,800 is a level to watch. But again, the overall feedback is, while the Nifty is consolidating, there is momentum in the financial names, and even the mid-cap and small caps are relatively outperforming, because that's where the pocket of strength seems to be. So they have consolidation, but there is buying in the financials and selective buying in the mid-cap and small cap.
Okay, and what about stocks, Nimesh? What are you picking up on individual names?
So in terms of individual names, the first stock is Stylum. That stock is buzzing in trade, up 5%. There's a block of nearly 1% equity changing hands, and I believe one of the domestic leading AIF was a buyer in today's block, and hence a big move in that stock. So that's the first one. The second stock is Triveni Turbines. That's been consolidating off late, but I believe there's going to be a large block deal in Triveni Turbines very soon, and it's going to be likely a clean out trade, from the seller entity. So that will be very important to track going forward in Triveni Turbines. So that's the second one. The third stock is Indiabull Real Estate. That's been buzzing in the last few days. In fact, this month the stock is up 10-odd%. Remember, the NCLT hearing for the proposed merger is scheduled for tomorrow. That is December 8th, but may not be the final one. If there is a final conclusion and the judgment, then you can see a potential re-rating further from these levels. So Indiabull Real Estate will react to the NCLT hearing tomorrow. So that's something to track for. And the last one is Sapphire. Again, I understand there's going to be a large block deal in Sapphire very soon. A leading FIA holder who owns a large chunk in Sapphire is likely to sell out. Again, could be a clean out trade, so that's going to be a large block, and that's something to track in Sapphire as well.
Okay, thank you very much for that. Let's continue tracking the markets. It's now down back to 18,550. So we've lost about 50 points in the last few minutes. The Nifty was closer to 18,600. But as you can see, in the last 10 minutes, we've dropped about 50 points. So there has been a knockdown. Mitesh Thakkar is back with us. Mitesh, what have you made of the sell-off that we've seen in the last 10 minutes? And any trades, any BTST calls?
I think, see, the Nifty, my belief is that it's still not hit those critical support levels of 18,450, 500 zone. So I think between that, this decline might get arrested and you might see buying again coming. Till then, I think it's still a market, which is cooling off a bit after the rally, and therefore, I think we're not in a hurry to buy the index. I think just wait it out, maybe a day or two. And on the stock side, one STBT on Jubilant Foods. That's a STBT with a stop just above levels of 543 for targets of 530, and a BTST, rather even a positional buy on Neville Lignite. I think that's a stock which is giving a fresh breakout today. That's a buy with a stop below levels of around 89 for targets of 102.
Okay, all right. Mitesh, thank you very much for those. Those are ideas coming through. By the way, the market is seeing a bit of a bigger dip now, 95 points, and we are, I think, practically about 100 points away from the 20-day moving average for the Nifty. But 18,545, this is a dip which is sharp and it's coming through very, very fast. Let's have the Nifty Bank as well. Take a quick close look at that. I mean, not really. I mean, you don't see the Nifty Bank exerting too much of influence. It's down, but nothing compared. It's more flat than down. But the Nifty now is selling off. So where is the pressure coming from? If I can just take a quick look, I think it is Reliance. So that single-handedly is responsible for about 35 index points. The intraday perhaps will tell you the story. There you go. 1.6% lower on the day on Reliance. And then there is HDFC Limited and Infosys, both of them, between them contributing about 25 index points on the Nifty. So that's, I mean, straight up about 50-55 points between three names, Reliance, HDFC and Infosys. You can see the sharp cut in Infosys and I think HDFC as well. Mayuresh Joshi is with us, Head of Equity Research at William O'Neill. Mayuresh, good to have you with us here. Thank you very much. The debate continues in terms of what the RBI has done, what it means. Perhaps we had, for example, KK Mistry of HDFC with us earlier today, who said, when I asked him whether he read the policy as perhaps being incrementally hawkish, he said, maybe the RBI has possibly left the room open for one more hike, and that is the hawkish element of it. Otherwise, he didn't see it as such. But from a market standpoint, what did you make, Mayuresh?
Afternoon, Prashant. First of all, wishing you, Rima, and the entire team at TV18 a very happy 23rd. You guys have been doing a wonderful job. Wishing many more and much more success coming your way. As far as the RBI policy is concerned, yes, I think there have been a couple of viewpoints on this. One hawkish and one is quite neutral at this point. The statements surrounding inflation is something that the markets are probably perturbed about. Till what extent will more hikes come through is what the market is fearing at this point of time. But again, I think if you probably read between the lines, inflation is way behind us. At least the peak inflation is what the governor has put forth. With food inflation expected to come down, the large expectations are that 25 bips to 50 bips, I think that would probably be the hikes that we are probably looking at, unless data probably worsens off. So to that extent, I think the uncertainty related to the inflationary pressures persisting for some time and rate hikes expected to come through, albeit at a lower pace, is something that is perturbing the market. But my own sense is that the markets will just stay at this, Prashant. Maybe in the next few trading sessions, then we'll move ahead as we go along and concentrate more on earnings where strong sectors will probably still stand out over the next few quarters.
Mayuresh, when we were just chatting with Julius Baer, Rupen Rajguru, he indicated that perhaps in the next few months, two-wheelers may do well because there are signs of a rural recovery. Though structurally, they prefer CVs as well as passenger vehicles. My question is more about the near term, the next 3 or 4 months. Any tactical recommendations, some in, some out, just not the structural story, but just tactically, any recommendations?
So afternoon, Rima, I think if you're probably talking about our expect to anticipate what probably happens within the auto and the auto ag universe, I think a large part of the move has probably taken place. But I think a few of the strong stocks that we probably follow at O'Neill, something like TVS Motor is an example, has still continued its upward trajectory. Strong volume growth, they've probably been able to pass through their prices. So margins have probably taken a hit. The new launches that they've done specifically in the two-wheeler EV stable and the price hikes that they've continued I think that can probably persist if one probably takes an immediate short-term view. But our own sense is that you can probably look at a few of these larger FMCG stocks like HUL is nearing its pivot level at this point of time. Large expectation again of rural recovery expected to take place in Q4. And I think a few of these FMCG players will move first as discretionary spending starts coming back. They'll obviously also have the tailwind in terms of lower input costs, edible oil prices, palm fatty prices. You've probably seen food derivatives and even packaging costs go down. So to that extent, I think the product portfolio that they have, the expectations of volumes improving Q4 onwards and sitting on better margins with input costs going down. I think a few of these larger FMCG companies can be tactical plays from the next 3 to 4 months perspective.
All right, stay with us, Mayuresh. We'll take a quick commercial break. We still got about 9 minutes to go for close. More stock talk on the other side. With news, of course, that we're down 3 digits, 100 points lower on the Nifty at the day's low at 18,541. Stay with us. Coming back with more. Okay, there's 6 minutes to go for close. Mayuresh and Mitesh are with us. Mitesh, any thoughts, anything you're seeing out there on the screen? Markets pushing a little bit lower.
Nothing much, Prashant. I think, as I said, the key test would come in once we hit those 18,450, 475 zones. I think that's where the averages and retracement areas are placed. So if that holds, then I'm not really worried. I would then possibly even attempt long positions. But what is possibly, a good sign is the fact that stocks like FMCG stocks like HUL and Marico are showing some strength, and that might be a sector which could actually pull the markets out. Apart from the fact that the Brent isn't very negative, it's some select mid caps are still doing well.
Okay, today actually leadership has come in from the FMCG names. So Asian Paints has surged up close to about 2%. Remember, Brent crude prices have seen a seminal decline. It's decisively broken lower. Brent crude right now is actually at 78.1, so even lower than the levels that it was in the morning, which was about 79. So we've seen a fall in Brent crude prices. And, if you compare it to the levels that we were trading at pre-war, that same time last year in November and December, just at the beginning before the war broke out, we were averaging close to $75 per barrel. So we are getting back to the levels that we were, and this decline in crude prices is boding well for many of the consumers of crude. So Asian Paints, of course, has been one of the big movers today. But apart from that, HUL, ITC in the consumption pack of late has also started seeing increased buying. Mayuresh, everyone talks about travel, revenge theme, and that's the entire pocket has done exceedingly well in 2021. Do you think next year could be, 2022, do you think next year could be just as strong for the hotel names, for the hospitality sector, or the allied sectors like VIP, Safari, that entire block?
Yeah, I think, Reema, I think the numbers will still come out to be very, very strong. I think Q3 is going to be one of the strongest quarters for everything related to hospitality. I think hotel stocks, luggage stocks, and the likes of it. But to a large extent, when you roll over numbers to FY24 and 25, you'll already be sitting on a very heavy base of this year's or the current year's financials. So I think to keep on outmeeting that at the proportion which they have done this year out of the unlock period or out of the COVID period that they're coming out of, I think the valuation stack up is now going to look very, very expensive for this entire pack. So we liked a few stories within this, a few luggage makers, we like Indian hotels from the hotel space, but I think they've met their targets. And to a large extent, we've tried to put in a reasonable amount of growth estimates for 24-25 as well. So I think numbers will keep on coming, in my opinion. But you have to be very, very specific within the spaces itself. In the same breath, our own sense at O'Neill probably points out, and this has been a much talked about sector, capital goods. But within this, I think a few of the infra-related stocks and a few capital good companies, in our opinion, can continue doing well, even if the base is larger, because more and more heavier orders, larger orders with better margins are coming through. Execution period is improving. Private capex, incidentally, has surpassed the pre-COVID levels as well. So I think there are a lot of tailwinds for this sector, even if it has moved significantly over the past months.
All right. Mayuresh, we'll leave it there. A good conversation as always. Really appreciate your time here on CNBC TV18 and look forward to our next chat. Well, you got the market down 94, so leaves off around the lowest point of the day, but not quite. Bounced about 10-15 points or so. And as I said, I mean, towards the end, the pressure came really from three names. One is Reliance, outsized influence, of course, because the sheer weight. The next is HDFC, and the last is Infosys. These three contributing to about 50-odd points to the 100 points that the Nifty actually lost today. So that's the session. Actually, today also, bulk of the action happened in the first couple of hours, and then the market went into a bit of a lull sideways move, and then there was a sell-off right at the end in the last 30 minutes of a trade. Real estate was down, energy as a pack was down, and you had the IT services index, which was lower in trade as well. Outside of the three names that I mentioned, Nifty names I mentioned, the others are NTPC, Tata Motors, and Bajaj Finserv, which are the cuts that we saw. Market breadth was negative, broader market stream.
Mid-cap index down 0.6%, advanced decline ratio negative, nearly 1,800 stocks closing in on the red. Big movers today include HDFC AMC, despite the expected selling pressure coming in from Aberdeen. Stock up 3.7%. Bikaji strong Q2, close to a 40% bottom line growth. Dabur, after the Morgan Stanley upgrade, closes with a gain of close to about 1.5%. Apart from that, PSU banks had a good day. So whether it's Central Bank, UCO Bank, IOB, J&K Bank, also rising for the second day in a row. Okay, there goes the bell. That is Nigel and Steffi. She's the one who helps fixing all guests, and they're ringing in.
Keep ringing, guys. Keep ringing. Okay, that's the bell ringing from the Bombay Stock Exchange. Nigel and Steffi, thanks very much for that. I mean, that looked cool.
Absolutely. This whole day felt like so festive, right?
Absolutely, absolutely. 23 years, and that's essentially.
And counting.
And counting, of course, and counting. And it's been tremendous getting you programming day after day. And of course, today has been special as well. Let's actually continue with that theme. And let me throw it across to the CNBC-TV18 newsroom, where that is the cake. That's 23rd birthday cake, which we're going to cut. Over to you guys in the newsroom.
And, for the benefit of our viewers, you see us, you see the anchors on CNBC-TV18 every day. What you don't see is the army of people that put those shows together. So this is a chance for you to meet the team that actually does all the hard work. This is the news desk, both the morning as well as the evening desk, that puts all of our shows together. A big round of applause to all of them. We've got all of our other team members here, the reporters, the assignment desk, the ticker desk, our production crew, our camera people, the guest desk, all of them who do such a spectacular job of putting all of our shows together day after day. This is one of the most hard-working teams that I've had the pleasure of working with, everyone's excited, because it's not very often that we actually get a chance to take a break, especially between shows, because the 4 o'clock show is live. We run a 24/7 live operation, but this team really deserves all the credit for the work that goes into putting this channel on air day after day. So thank you to all of you for doing what you do and for bringing, as I said, your passion, patience and perseverance to work every single day. I want to give a quick shout out to a few very, very special individuals. I'm going to get the camera to follow me around, because this is the man who is the rock. He's running away. He is running away. But this is B. Shankar. He is undoubtedly the rock at CNBC-TV18 and at Network 18, and he does everything, the coolest AR/VR graphics that you see and everything else that goes on. He's our strength behind the scenes, and of course, you've got our own RBI governor right here. so Lata, and she has, of course, also been a strength to all of us here within CNBC-TV18.
I think enough of me today.
Enough.
Get to the others. Yes. The strength behind the strength.
Yes.
They're
all. We also have a team that's very, very shy, so they don't want to be seen. But they're all lurking in the background here. They're all lurking in the background here, but they're the ones who actually do all of the work. So thank you from all of us to our viewers for tuning in every day and for keeping us relevant. दो माइक का क्या करूं? अच्छा प्रॉब्लम हो गया. Thank you. Okay. And I also want to give a big shout out to all of our teams who are not here with us in the newsroom. The Delhi team, Parikshit, Saurvi, Shruti, and of course everyone, Amiruddin. Thank you guys for being an outstanding team. Saurvi, don't hide behind Parikshit. so thank you to all of you for being a part of the CNBC TV18 journey, and of course many of our colleagues joining us there from CNBC-TV18.com and CNBC Awaz as well. And then there Achal and gang in Bangalore. Big round of applause. Big round of applause to our team in Bangalore. Ritu Singh, who's just moved from Bombay to Bangalore. So, guys, we miss seeing you here in person, but thank you so much. And then, of course, we've got Chennai joining us as well, and we've got our wonderful colleagues here who of course continue to contribute to the strength of the CNBC TV18 story. We're going to get our youngest colleague, perhaps, who also happens to be celebrating her 23rd birthday today, Shreya, to do the honors. So happy birthday, Shreya, for turning 23. And yeah, over to you. Go ahead and cut the cakes. No. Guys, come on, guys, come on. Arey, everybody go, yeah. Guys, go, no. Guys, go. Please, chalo. Come on. Sonia, go. Ekta, go. Go, guys, go. Don't be shy, yeah. Go. I'm here. No, I'm here. Woo! क्या है ये fake confetti? What is this, yaar, Sharat? Happy 23 CNBC TV18.
Happy birthday, CNBC TV18.
Happy birthday, CNBC TV18.
Happy birthday! Happy birthday, CNBC TV18. Happy birthday, CNBC TV18. Happy birthday, CNBC TV18. 1 year older, 1 year wiser. Happy birthday, CNBC TV18. Happy birthday, CNBC TV18. Happy birthday, CNBC TV18. Wish you all the success. Happy birthday, CNBC TV18. Happy birthday, CNBC. Happy birthday, CNBC TV18.
Connecting CNBC TV18 from last 23 years. Happy birthday, CNBC TV18.
Just to 23 years of CNBC TV18.